Well, ladies and gentlemen, a very good afternoon. And on behalf of the Board of Directors, it's my great pleasure to welcome you all to the 2025 Annual General Meeting of your company, Charter Hall Group. My name is Stephen Connery. I'm the Chair of the Charter Hall Group Board of Directors. It is now 2:30 p.m. and as the necessary quorum is present, I declare this meeting properly constituted and open. I'd like to commence the meeting with an acknowledgement of country. Charter Hall acknowledges the traditional custodians of the lands on which we work and gather, and we pay our respects to elders past and present. Ladies and gentlemen, this afternoon I will provide a brief overview of our business and achievements during the financial year 2025. Our Managing Director and Group CEO, David Harrison, will then provide an update on our business and key results, as well as an outlook for financial year 2026. We will then move to the formal business of the meeting and the resolutions for your consideration. There are 7 items of business and 7 resolutions for your consideration today. I'll just run through those. Item 1 relates to the consideration of the annual report. Item 2 relates to the re-election of Director Greg Paramor. And when the time comes, I will ask Greg Paramor to address the meeting, providing some personal background and information supporting his re-election. Item 3 relates to the adoption of the remuneration report. Item 4 relates to the issue of service rights to our CEO, David Harrison, being the mandatory deferred STI portion. Item 5 relates to the issue of performance rights to David Harrison, being the LTI plan. Item 6 considers the appointment of a new external auditor, and Item 7 proposes a capital reallocation. There'll be an opportunity to ask questions of the directors, and I will ensure there is adequate time after those formal resolutions are dealt with to address any issues security holders would like to raise. May I now introduce my fellow non-executive independent directors. Firstly, David Ross, who is a member of the Remuneration and Human Resources Committee, a member of the Audit, Risk and Compliance Committee, and a member of the Investment Committee. Jacqueline Chow, who is Chair of the Remuneration and Human Resources Committee, and is a member of the Audit, Risk and Compliance Committee and the Nominations Committee. Karen Moses OAM, who is Chair of the Audit, Risk and Compliance Committee, and is a member of the Remuneration and Human Resources Committee and the Nominations Committee. Greg Paramor AO, who is a member of the Remuneration and Human Resources Committee, the Nominations Committee, and is Chair of the Investment Committee. And Karen Penrose, who is a member of the Audit and Risk Committee and the Investment Committee. And finally, I introduce our Managing Director and Group CEO, David Harrison. Also present today, amongst other colleagues, I welcome Mark Bryant, our Company Secretary. Also, we have representatives from our auditor PwC present today, and Ryan McMahon will be available to answer any questions about their audit of the financial statements from any security holder. As one of the resolutions today does relate to the appointment of EY as Charter Hall Group's new external auditor, may I take this opportunity to sincerely thank PwC for its 20 years of valued professional service to Charter Hall. And ladies and gentlemen, it is my pleasure today to address the AGM in this my first year as Chair of the Group. Our board, comprised predominantly of independent directors, provides leadership and direction for the Group, with a core responsibility of setting the tone for good governance critical to achieving our corporate objectives. The board also, of course, provides clear governance and oversight to guide and assist management in continuing to deliver the Group's agreed strategy and maintain and entrench ethics in all actions. And we will continue to serve you in this way. Ladies and gentlemen, one of our board members, Karen Moses OAM, is not seeking re-election to the board at this AGM. Karen has been a non-executive director since 2016, including as Chair of the Audit, Risk and Compliance Committee. I acknowledge with sincere appreciation her service and remarkable contribution. Karen, thank you so much for your distinguished term on our board. It has been a great pleasure working with you. I also acknowledge David Clark, the previous chair of the board. At our last AGM, we acknowledged and thanked David for his impressive term as chair. As financial year 2025 marked his final year of service, I thank him today for the contributions to our result over this year, and of course over the decade, where his exceptional leadership, vision and commitment has left a lasting legacy. This year, as many of you might know, marks our 20th year, our 20th anniversary of being listed on the Australian Securities Exchange. It is an auspicious milestone of which we are all very proud. From $1 billion in funds under management in 2005 to $84.3 billion in financial year 25, Charter Hall has built a reputation for creating sustainable and resilient portfolios, leveraging our scale and capability to consistently deliver enduring value for our investor and tenant customers. And ladies and gentlemen, can I say that this strength of our relationships with our tenant customers continues to be an essential strategic focus. Many of our tenant relationships are multi-city, multi-sector and multi-year partnerships using our expertise in property to build deep, mutually successful strategic benefits. By working in active partnership across our portfolio and collaborating with each customer to meet their current and future aspirations, we work hard and strategically to meet their evolving needs. We value the partnerships, we don't take them for granted, and we never will. This approach has continued to deliver very pleasing results, with all of our sectors exceeding their FY25 customer targets and our overall Net Promoter Score, the NPS, increasing to +53. This is a very strong result for the year, and I think a testament to the performance of our people and their relentless focus on our tenant customers. Again this year, we have focused on understanding the challenges our investors and tenant customers are facing and the opportunities they are pursuing, to ensure we are positioned to partner with them in creating solutions that drive mutual success in a constantly changing world. Ultimately, the strength of our tenant and investor customer relationships is one of the keys to our resilience as a customer-centric business. Financial year 2025 marked a clear shift in Australian commercial property markets, with a broad range of indicators signalling a rotation towards the next growth cycle. Our funds management business, the growth engine of our earnings profile, saw a doubling of net equity flows from the prior year. In turn, FY25 was the year where Charter Hall returned to a positive trend in earnings. We were pleased to report FY25 OEPS of 81.4 cents per security, which was 7.4% growth above FY24. And our CEO, David Harrison, will shortly talk further to our expectations for FY2026. Here on this slide, we show the 10-year history of the company's EPS and also its strong track record in regular growth in distribution income to our security holders. Charter Hall Group has achieved approximately 12% EPS growth on an annualised basis over the last decade. The group has also increased its distributions per unit significantly over the period. Our ability to deliver these earnings reflects the continued growth in our funds management business, the smart investment decisions we have implemented, the solid performance from our property co-investment portfolio, and our discipline across the platform. Over the same 10-year period, we've also retained cumulative earnings of $1.3 billion, supporting the creation and growth of new funds and partnerships as we continue to co-invest alongside our valued institutional investor clients. A balanced approach to retaining capital for future growth while also providing a growing stream of distributions has been a measure of the group's success. Ladies and gentlemen, it is the responsibility of the board and our leadership team to ensure that we foster a dynamic and rewarding workplace that attracts and retains top talent. In order to do that, we have continued to invest in learning and development opportunities through rotations, promotions, and evolving roles across our organisational structure, whilst also ensuring our people feel safe, supported, and included in our workplaces. Our team engagement results demonstrated that this focus is working, with our scores for engagement, well-being, and belief that there is opportunity for development and growth significantly exceeding the Australian company engagement norm. Sustainability is integrated into all our business operations and activities, with our approach designed to reduce our impact on the environment while creating commercial outcomes for the group and for our customers. With a focus on decarbonisation and climate action, we continue to deliver measurable progress on our environmental goals this year. From 1 July 2025, our whole platform operates as net zero through existing on-site solar and renewable electricity contracts. We have achieved a 77% reduction in net Scope 1 and Scope 2 emissions, driven by energy efficiency, electrification, renewable electricity, and residual emissions compensation nature-based carbon offsets. We have now installed a total 86 megawatts of solar power, an uplift of 6% since FY24, of which 80% is directly supplied to tenants. An additional 5.8 megawatts is planned or committed over the next 18 months. We are proud to maintain Australia's largest footprint of independently green-rated assets, with close to 9 million square metres of assets with Green Star performance ratings. We remain focused on building resilience in our assets to support our customers through the transitional risks and opportunities of a changing climate, ensuring we deliver long-term value. And similarly, ladies and gentlemen, our social partnerships and community investment continue to be focused where we can make the most difference. As the first Australian property company to align with Pledge 1%, we've continued to partner with the community to have an enduring impact, with more than $1 million invested to date with the Red Cross and Foundation for Rural and Regional Renewal to support Australian communities impacted by natural disaster and hardship. We have also actively contributed to our community partnerships with 130 employment outcomes in the year for vulnerable young Australians with state-based employment partners. We also see governance as a critical component of sustainability. And as mentioned earlier, your board is comprised of a majority of independent directors whose skills and experiences, I believe, provide the right mix with which to guide strategy and provide an overall strong contribution to the success of the group. And now, ladies and gentlemen, it's my pleasure to invite the Managing Director and Group CEO, David Harrison, for his operational update.
Thanks, Stephen. Welcome everybody. Good to see some long-term shareholders that I recognise, along with the rest of us. Okay, so as Stephen mentioned, this year we celebrated 20 years as a listed company, having listed on the stock exchange in June 2005. As you can see from the slide, it's been quite a successful evolution. We've moved into the ASX 100, pretty close to the ASX 50, one of the top 5 A-REITs by market cap. Also moved into the all-important EPRA NAREIT REIT Index, and have grown our FUM from when we IPO'd in 2005 from $1 billion to 84 billion. Most pleasingly for me and other shareholders, we've driven the OEPS, or earnings per share, growth materially by nearly 4x over that period, as indicated by today's upgraded guidance to 95 cents for FY26. As one would expect, the EPS growth that has driven our performance has also seen our market capitalisation grow from 20 years ago at $264 million at IPO to around $11 billion today. Over this period, CHC shareholders have enjoyed a 15.2% per annum total shareholder return. That was as of 30 June. 2x the average of the ASX 200 and nearly 3x that of the AREIT 200 index. We're proud of that track record in delivering the highest TSR across the AREIT index over the last 2 decades, while sitting as one of the strongest performing entities within the whole of the ASX 200 across all industries within the cohort of ASX 200 companies that have been listed for that 20-year period. Companies don't often get to celebrate such long-term outperformance, so please pardon this small indulgence as the start of my presentation. Turning to the group's earnings in FY25, operating earnings for the full year was $385 million, which translated to a full year earnings per share of 81.4 cents, which is 7.4% growth over the prior year. The group's return on contributed equity continues the multi-year 20% plus rate at 20.8% on a post-tax basis, which obviously further is being accelerated in FY26 with today's upgraded guidance. We also continue the long-term trend of a 6% dividend per share growth in FY25, which we continue to guide for in today's FY26 update. Group FUM over the year rose from 80.9 to 84.3 billion, and property FUM has risen from 65.5 to 66.8 billion. At the end of FY25, our balance sheet remained in a very strong position, with 6% balance sheet gearing, which is based on tangible assets, 2.7 billion of property investment portfolio that is well diversified by sector, tenant WALE or average lease term to expiry, the lease expiry spread, rental growth diversification, and most importantly and often missed is the tenant credit quality of our tenant covenants throughout every one of the sectors we invest in. We retain dry powder, both on balance sheet and throughout the whole platform, to take advantage of attractive vintage buying that exists right now in this early part of the upcycle, which will also help continue to drive earnings growth across our 3 earnings segments. Slide 10 and equity inflows. With most of our assets currently being independently valued well below replacement value and severely constrained supply markets due to rising construction costs over the last 5 years and a growing population, we forecast returns, we believe forecasts or expected returns are going to be quite attractive to our investors across all sectors that we operate within. We're seeing a growing appreciation of the attractive returns on offer with increased investor activity across our platform, evidenced by the 3.4 billion of gross equity inflows we attracted in the whole of FY25, which were doubling those in FY24, and then further equity inflows that we have previously announced in the first 6 weeks of FY26 of circa 3.3 billion. Highlights for the year include the privatisation of the ASX listed REIT HPI, the 1.3 billion raising in our wholesale industrial fund CPIF, the $1.75 billion equity launch of our wholesale convenience retail fund called CCRF, and of course the previously announced appointment to the $2.1 billion Challenger portfolio. Slide 11 covers our cross-sector tenant relationships. The top 20 tenants within our platform represent 55% of total platform net income. Today we have over 4,500 tenants across our platform, collecting in excess of 3.5 billion of net rent per annum. We're very active during FY25 across a range of customer-centric strategies with our tenants. We've been busy renewing leases, expanding lease area, expanding our tenant relationships across sectors, and as always, we are in constant dialogue on potential corporate sale and leaseback opportunities. Partnering with our tenants on a long-term basis is a core pillar of our strategy. Now just turning to the I&L portfolio on slide 12. Industrial and logistics business continues to expand, and we've had a very successful year across the country. We've had strong leasing momentum, leasing over 560,000 square metres across nearly 50 transactions. We enjoy a 99% occupancy across our entire industrial and logistics portfolio, which I say to my team means there's a 1% opportunity on lost rent, but hopefully they've fixed that by now, which compares to a national average of 97%. And our total portfolio has a WALE of close to 9 years. The 1.3 billion equity raising for our wholesale fund CPIF was a milestone for the group and has provided significant additional capital to provide for CPIF to continue to build out its pre-commitment-led development pipeline. That equity raising continues into FY26. We've been acutely focused over many years on amalgamating key logistic land sites across the country. What we retain today in terms of future pipeline, with over 2 million square metres of industrial land on over 50 individual sites, is very difficult to replicate. Slide 13 and our office portfolio. The office platform spans over 2 million square metres of lettable area and about 24 billion of funds under management. This is the largest office portfolio nationally and one of the youngest, with the longest WALE of any large office platform nationally. We continue to enjoy strong leasing success, having leased over 227,000 square metres across over 200 leasing transactions. This year we saw a noticeable shift in sentiment from our tenant customers, with 95% of all leasing activity remaining in the same or expanded lettable area per tenancy. 65% of our leasing deals were for spaces above 1,000 square metres, leased to government and institutional corporate tenant customers. Notably, our office portfolio has maintained a very strong 96% occupancy versus a national average of 84%, demonstrating the strength and depth of our relationships with our tenant customers and our ability to deliver on our tenant customers' evolving needs, but most importantly reflects the modern high-quality nature of our office assets. Now let's turn to slide 14, what we call the new lucky sector, convenience retail. We manage the largest convenience retail shopping centre portfolio in the country. Our total portfolio, including neighbourhood and small sub-regional convenience shopping centres, triple net leased service stations, pubs, and of course Bunnings assets, totals over 16 billion. In retail, our non-discretionary convenience portfolio continues to provide resilient income returns. We retain high occupancy, strong releasing spreads, improved footfall, and record sales densities, demonstrating the resilience and defensive nature of the sector. The privatisation of HBI, a $1.3 billion long WALE hospitality portfolio, was another addition to our convenience retail platform during FY25. This portfolio of assets is highly additive to the portfolio of our listed REIT CQR, and of course our wholesale capital partner in Host Plus, who has partnered with us on all of our triple net hospitality assets. The newly launched wholesale pooled fund, CCRF, we have a lot of acronyms in Charter Hall, so I'll try to explain what they mean. Charter Hall Convenience Retail Fund, focused on investments in metropolitan convenience shopping centres and net lease hardware retail assets, was well timed with growing global interest in the sector from institutional investors. It was pleasing, the hard work of our team paying off when our CQR was ranked as our number one preferred landlord amongst peers, now achieving this ranking 4 years in a row from tenant surveys that were conducted by independent sources. Slide 15 and social infrastructure. Similarly, the essential service thematic embedded in our social infrastructure portfolio and the importance of these assets to the community and the economy means these assets have delivered resilience and liquidity. The low correlation these assets have to the broader economic cycle continue to make this an attractive area of deployment for the group and for our funds. Let's now turn to the outlook on slide 16. At our full year results in August, we reported OEPS for FY25 of 81.4 cents per security. That was about 7.4% over the prior year. Then in August, we also provided guidance for FY26 of 90 cents per security, representing 10.6% growth over FY25. Today, due to heightened investment activity in our property investments and funds management platform, with transaction volumes rising and equity flows performing well, we're upgrading our guidance for FY26. Based on no material adverse change in our current market conditions, FY26 guidance has been upgraded to post-tax operating earnings of approximately 95 cents per security. This represents a 5.5% increase over previous guidance and a 16.7% growth in earnings per share over FY25. This guidance continues to have no expectation of performance fee revenue embedded in FY26. FY26 distributions per security guidance is for the continued annual 6% DPS growth rate over prior years. In closing, I'd like to thank our people around Australia for their continued hard work and dedication to delivering for our customers throughout property cycles. I would also like to thank the group board for their continued strategic guidance, along with the independent directors of all of our fund boards and the many investors that sit alongside our executive on wholesale partnership investment committees. I'd also like to thank you, our security holders, for your continued trust and belief in us. I'd like to extend, as the chair did, our sincere thanks to David Clark, who had been our prior chair for the past 10 years. We greatly valued his guidance, insights and strategic thinking throughout his time at Charter Hall. David leaves Charter Hall in an excellent position and his leadership has been greatly appreciated. Finally, I would also like to thank and acknowledge the contribution of retiring board director Karen Moses, who joined the board in September 2016 when our share price was $5 per security. During this 9+ year period, Charter Hall's delivered share price growth of nearly 500%, rising to about $24, has continued at 6% compound per annum DPS growth and delivered a very strong total shareholder return of 18% per annum for shareholders. On behalf of our shareholders, Karen, and the management team, we thank you for this long-term contribution and service to Charter Hall's growth and success over this period. I'll now hand back to Stephen. I think that applause was for Stephen coming to the rostrum.
It most definitely was not. It was absolutely for Karen. Thank you very much, David, for articulating that so well, the operational update. And ladies and gentlemen, I'll now pause to see if there are any questions in relation to my opening remarks or indeed David's operational update before we then push on with the other items of business today.
My name is Partha Sarathy. I represent the Australian Shareholders Association. Firstly, on behalf of the association, we want to congratulate Charter Hall on completing 20 years as a listed entity and for achieving such stellar performance, which includes TSR of 15% and funds under management of 25%, which is remarkable under all the circumstances, and particularly to Mr. Harrison for being through as a part of the journey continuously. My question is in relation to the strategy, particularly the deploy part of your strategy, and maybe relating to one of the items that was raised before. You've got your ability to a strong balance sheet with the ability to deploy funds with a gearing of only 6%. as you look at opportunities, what I would like to see is whether, or what we'd like to check is whether you would be considering data centers as a option for growth, as this complements your industrial portfolio and is a very booming sector. Thank you.
Well, thank you for your question, and I will ask David to get into some of the detail there, but I will make some general remarks regarding strategy and what we do and indeed what we don't do. As I've discussed with some of you, in fact, over just recent weeks, we have a very considered strategy on doing what we do well, but with a commitment to making sure we do it better all the time, sticking to where we are big, but with a very firm belief that we can always be bigger. But we also make a conscious decision on what sectors and indeed geographies that we don't wish to pursue. And that is, as I said, a very considered approach. It's okay to say no to something if that's the decision. It's not okay to not do something because you haven't considered it. And we've given a lot of thought to data centres and indeed other sectors and other geographies. And we've come to a view on what portion of our strategy will contain that. But David, I'll ask you to give a few more specifics in relation to data centres and indeed any other part of the strategy which might be relevant to the question.
Look, I think for us, there are three ingredients that are absolutely essential for us to deploy our capital or to deploy our managed capital. The first one, are you an expert in that sector? We don't profess to be an expert in built form data centers. We have a very large industrial footprint. We use our skills in procuring power, procuring planning, but I think we would prefer to see those sites enhanced through what we are good at and let someone else buy the land if the highest and best use is built form data centers. The second ingredient that is important for us is, are we going off piste, investing in something that our capital didn't sign up for in the first place? And all of our logistics funds are logistics funds. So I doubt that we would get the support of our industrial partnership and fund investors to be moving away what was the fundamental thesis of why they gave us capital in the first place. The third part for me is competition and supply. And if we think about a sector, we want to think that we have the expertise to be one of the dominant players in that sector, and I don't think we do. And nor do I want to employ the people to prosecute that case. So I think there's plenty of other experienced players in that space that both domestically and globally that have got a track record, and it may be better for them to pursue that strategy. But for us, we'll stick with what are our core competencies. As the chair alluded to, part of our success over the last 20 years is avoiding potholes and growing in areas where we can be a dominant player, and that's not going to change the way we think about various alternative sectors. Hopefully that answers the question.
Thanks, David. Any other questions at this point in proceedings? Okay, thank you, ladies and gentlemen. I will now proceed to formal business. To begin, I table the notice of meeting dated 20 October 2025, which contains the resolutions up for consideration today, and I'll take the notice of meeting as read. Copies of the notice of meeting and annual report have been made available to you by post or email and are available to view on the web page, and copies are also available here this afternoon, as you can see. Ladies and gentlemen, there are 7 items of business, as I mentioned before, 7 resolutions for your consideration today. All resolutions to be put to the meeting today will be decided on a poll. Item 1 is the annual report and to approve the annual report. This item should now be displayed on your screen. Please note that there is no requirement for security holders to approve these reports, but I ask, ladies and gentlemen, are there any questions from security holders in relation to this item? And as mentioned in relation to the financials, auditors PwC and Ryan McMahon in particular here to take any questions relating to the preparation and content of the auditor's report and financial statements and the conduct of the audit, if you so require. Thank you. I will now proceed to other formal resolutions set out in the notice of meeting. Item 2 is for the election and re-election of directors. These resolutions are ordinary resolutions, as you can see, are displayed on the screen. As I mentioned, I would like to ask Director Greg Paramor to say a few words detailing his background and experience for the benefit of security holders. Over to you, Greg.
Thank you, Chair. I've been involved in the property and funds management industry for more than 5 decades, which makes me slightly over 30 years of age. And I've been involved in the establishment of a number of property groups, and the last one was Folkestone, which Charter Hall acquired in 2018, and I was invited to join the board at that time or shortly thereafter. So it's been a privilege to serve on the Charter Hall board from that time. And I offer myself today for re-election to serve the interests of all shareholders and stakeholders for the next 3 years. Thank you.
Thank you very much, Greg. I'll now pause to allow security holders to ask any questions if they have any at the moment. Thank you. I now declare the poll open and ask all security holders to cast their votes for or against this resolution by marking the box on their voting card alongside the resolution. And I'll also now display the respective proxy votes received, and they should come up on the screen now. And while the final results of the resolutions won't be known until after the conclusion of the meeting, it is clear from the proxies received that Greg is re-elected. So I congratulate you, Greg, on your re-election to the board. Resolution 3 is an ordinary resolution of Charter Hall Limited and relates to the adoption of the remuneration report included in the annual report for the year ended 30 June 2025. This is not a binding vote. Instead, it is characterised as advisory in nature. However, it provides important feedback to the directors on how security holders feel on a range of matters, including remuneration. So I now take the opportunity to pause and allow any security holders to ask any questions if they have any.
Partha Sarathy again, representing Australian Shareholders Association. We are voting in favour of this resolution, but we just want to make an observation in relation to the remuneration. That being that following the recent change into STI arrangements, we noticed that the change was to increase the maximum opportunity from 150 to 200%. We believe that this probably inadvertently skews the balance between STI and LTI at maximum opportunity, such that STI is 52% and LTI is 32%. ASA's preference is for the split to be even. So it's just an observation.
Thank you very much. If there are no further questions, I will now display the proxies on the slide. There we go. Thank you very much. Ladies and gentlemen, the fourth item is proposed as an ordinary resolution of both Charter Hall Limited and the Charter Hall Property Trust, and it relates to the issue of service rights to our CEO and Group Managing Director, David Harrison. Each year, a third of Mr. Harrison's short-term incentive is deferred into service rights for a period between 1 and 2 years. As a director of Charter Hall, an issue of securities to Mr. Harrison generally requires security holder approval. Accordingly, this resolution relates to that deferral of the incentive into equity in Charter Hall, and the text of the resolution is on your screen now. Again, I'll pause to see if there are any questions in relation to this. As there are no questions, I'll now display the proxies. Thank you. Ladies and gentlemen, to item 5, the next resolution It's again proposed as an ordinary resolution of both Charter Hall Limited and the Charter Hall Property Trust and relates to the issue of performance rights to our CEO, David Harrison. Each year, David is awarded performance rights in Charter Hall as part of his annual remuneration. These performance rights vest at the end of 4 years, but only if the performance hurdles are met. Again, as this scheme involves an issue of securities to Mr. Harrison, security holder approval is required. The text of the resolution is now on your screen. Again, I'll pause to see if there are any security holder questions from the floor. Thank you very much. The proxy results are now displayed on the screen. Thank you. Item 6, the sixth resolution for today's meeting, is an ordinary resolution and relates to the appointment of EY as external auditor following the resignation of PwC. I mentioned before, and I say it again, I take the opportunity to thank PwC for their long service and assistance as external auditor for Charter Hall over the past 20 years. It's greatly appreciated. The text of the resolution is on the screen. Again, I pause to ask if security holder questions in relation to this matter. As there are no questions, I'll now display the proxies. Thank you. Ladies and gentlemen, the seventh and final resolution for today's meeting is the proposed capital reallocation. I won't read out the full text of the resolution given its length, but would refer you to the notice of meeting if you'd like to again read that. Security holders are being asked to approve a capital reallocation from CHL, the company, to CHPT, the trust. This proposed capital reallocation will be similar to the reallocation that was approved by security holders at the 2024 AGM and implemented on the 11th of April this year. Instead, I would like to briefly explain the purpose of the resolution. Charter Hall Group trades on the ASX as a stapled security, with one unit in the Charter Hall Property Trust stapled to one share in the company, Charter Hall Limited. The group's capital base is split between these two vehicles, and approximately 20% of the group's capital sitting in the company and approximately 73% of the capital sitting in the trust. The company undertakes the group's fund management activity, and as this has grown strongly in the last decade, it has generated significant retained earnings, increasing the capital base of the company relative to the trust. Because the majority of the group's investment activity is undertaken in the property trust, we'd like to move some of the capital currently sitting in the company over to the trust. This can be achieved through either a special dividend from the company or from a capital reduction in the company. In either form, there is no change to security holders' holdings, to Charter Hall's earnings or distribution guidance, nor is there any physical payment of cash to or from security holders. It's worth noting that if we do pursue this reallocation through a special dividend, it will be fully franked, resulting in franking credits to security holders. The form and size of this capital reallocation and whether it is implemented through a special dividend and or a capital reduction is subject to a class ruling from the ATO. So today, similar to last year, we are asking security holders to approve this resolution, which allows the constitution of the company and the trust to be amended to allow the proportion of capital allocated between the two to be rebalanced to what we feel is a more optimum structure for the future. I realise this can be a somewhat complicated matter, so I'll pause now to ask if there are any questions that we can deal with. Thank you, ladies and gentlemen. I'll now display the proxies for this matter. If you haven't done so already, I invite you to mark your voting cards, and the results of the polls will be made available to the ASX and put up on our website later today. For all of your cards, would you please hand those forms to the registry representative who will take them to collate the results. Ladies and gentlemen, that concludes the formal business. Again, I'll pause one last time to allow security holders to ask further questions if they have any. I've received no questions online, but happy to take any further questions from the floor. Well, ladies and gentlemen, that does conclude our meeting today. I take the opportunity to thank our Group Managing Director and CEO, David Harrison, and our senior leadership team, many of whom are here today, and I look forward to you chatting with after the meeting. And I thank them and the wider Charter Hall team for their extraordinary contribution again this year. It is greatly valued. It's greatly appreciated. And ladies and gentlemen, on behalf of your board, I thank you for your attendance today and for your ongoing support of Charter Hall. Thank you very much.